coaster when such announcements come in, right? Hi everyone, this is Shrishti Gosavi and today we are diving into the impact of economic announcements on market indices. Hold tight because we are going to show you how to prepare and respond like a pro. Let's get started. First things first, what exactly are these economic announcements? Things like GDP reports, unemployment rates, and interest rate decisions. They are economic announcements that can have an impact on the economy. For example, when the Federal Reserve in the US announces an interest rate hike, it's like the first big drop on a roller coaster. Exhilarating for some, terrifying for others. Stock indices can swing wildly and investors are left wondering if they should scream or throw their hands up in joy. Let's take a real-world example. In March 2023, when the India's GDP growth rate was announced to be higher than expected, the Sensex shot up like a rocket. Investors who were prepared made a killing, while those caught off guard, well, let's just say they had a rough day. Now, let's dig a bit deeper with more examples. First, interest rate decisions by RBI. When the Reserve Bank announces an interest rate cut, it can boost the stock market as borrowing costs go down, encouraging spending and investment. For instance, in February 2020, when RBI announced an unexpected rate cut, the Sensex surged over 500 points on the same day. Second, inflation data. High inflation can be a market dampener. In July 2021, when the consumer price index data showed higher than expected inflation, it spooked the markets, leading to a significant drop in the Nifty 50. Third, budget announcements. The annual union budget is like a Super Bowl of economic announcements. For example, after the budget 2024 announcements, Indian stock markets fell in a knee-jerk reaction initially. NSE Nifty and BSE Sensex fell by 1% each. Fourth, corporate earnings reports. Although not a macroeconomic announcement, quarterly earnings can significantly impact specific stocks and indices. Take the example of Reliance Industries in Q1 2024. The company showed a significant profit growth resulting in 3 to 5% increase in its stock price. Now, let's talk strategy. When an economic announcement is looming, there are few key steps you can take. First, stay informed. Use informative apps to track upcoming announcements and read up on market expectations. Second, diversify your portfolio. Don't put all your eggs in one basket. Spread your investments to mitigate risk. Third, set stop-loss orders. These are like safety nets for your investments, ensuring you don't fall too far if things go south for any buy or sell order that you have placed in the stock market. Fourth, stay calm. Remember, the market can be volatile, but panicking never helps. Stick to your strategy and trust your research. In a nutshell, economic announcements can shake up the market, but with the right preparation and response, you can ride the waves like a seasoned surfer. Markets are always going to be volatile. It's your strategy in the long run that really matters. Thanks for watching the video. If you like the information, stay tuned for many more such content here. Until next time, stay prepared, stay confident, and keep those investments soaring.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.